As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijit Mitra from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Nirav, and good afternoon and welcome to all the participants. So we have with us today Mr. Chandra Agarwal, MD of TCI Express, and Mr. Mukti Lal, CFO of TCI Express, to discuss Q4 and FY20 results. Without further ado, over to you, Chandra, for your opening remarks.
Sure. Thank you. Thanks, Abhijit. Good evening, everyone, and welcome to the fourth quarter and full year financial 2020 earnings call of TCI Express Limited. Before we begin a discussion about industry and business, I would like to thank you all for joining us during the ongoing health crisis caused by COVID-19, and hope you and your loved ones are doing well and keeping safe. On this call, we will start with quick business overview for the full year, followed by discussions about the impact of COVID-19 on the industry and the business, and how we are gearing ourselves to manage the impact of this pandemic. Then I will hand over the call to Mr. Mukti to discuss financial performance in detail. Our earnings presentation has been uploaded on the website and stock exchange, and I hope you have had a chance to review it. Now, coming to the results. I am pleased to report overall encouraging performance during the year financial 2020, despite the challenging economic and business environment. On a full year basis, TCI Express delivered total income of 1,026 crores. It's flat compared to last year, and EBITDA was at 126 crores with margins of 12.1%. Our company delivered a robust growth in profit after tax of 22.3% to 89 crores. During the year, we continued our focus on enhancing margins and improving profitability through higher capacity utilization, penetrating deep in the cities and tapping into growing SME customer, and of course the efficient working capital management. In the light overall sound performance, the company distributed dividend of rupees 4 per share for full year with a payout of 17.2%. TCI Express has added 17 new branches during the year to penetrate deeper in the selected geographies, and this strategy has been successful in contributing to the company growth. We have incurred a total capex of 32 crores towards the construction of new sorting centers in Gurgaon and Pune. The construction of these sorting centers was halted earlier due to the NGT ban, and now with the COVID-19, it has got delayed further. However, last week we have got the government approval to restart construction at these centers, and I'm hopeful that our new sorting centers will commence operations from third quarter of fiscal financial 21. We are putting our full efforts in making that happen. The complete automation and implementation of business intelligence at our sorting centers will result in shorter turnaround time, higher utilization, and enhanced operational efficiency in the long run. Overall, it is important to note that the business environment during the year remained challenging with the economic slowdown in the year 1920. Legal, industrial, and manufacturing activities across sectors. Despite all these challenges, the company delivered a top-line growth of 5% in the first 11 months from April to February 2020. Normally, March is considered to be the best operational month, where we see high movement of goods due to stock clearance. However, with the unfortunate India shutdown because of COVID in the middle of March, it impacted our business performance. Although the nationwide lockdown brought businesses to a halt and disrupted the economy, we stand in full support with the decisions taken by the government. During these times, health and safety of our employees, partners, vendors, and other stakeholders remain utmost priority. With the announcement of the lockdown on 24th March, the company allowed work from home policy and promoted video and audio conferencing tools to interact internally and externally. Our offices resumed from 20th April, and we have taken various initiatives such as operating with limited workforce, sanitization, social distances at workplace, employee screening at regular intervals, mask and sanitizer distribution. We believe that all these measures are critically important to ensure safety of our employees at the workplace. COVID-19 impact on the industry. The business environment came to a grinding halt with the announcement of the nationwide lockdown in March. Markets rapidly deteriorated after mid-March with the closure of factories and offices along with the interstate movement, and that has clearly impacted the transportation and logistics sector. COVID-19 has impacted all categories of industries, and India's core sector output declined by 6.5% in March and is expected to decline in April as well. The pandemic has been rapidly evolving on a daily basis. The government has extended lockdown multiple times, and now with some relaxation, the economic activity has started but at a lower capacity. Last mile delivery are facing challenges such as strict restrictions on interstate movement, especially in the metro cities such as Delhi, Bombay, Calcutta, due to high cases of coronavirus, coupled with migration of labor, adding to transportation challenges. How TCI Express will manage the impact of this pandemic? The company is closely monitoring the impact of pandemic on the economy and business and have taken series of strategic initiatives to mitigate business risks. Number one, cost structure optimization. We are reviewing all our cost heads, negotiating with our business partners and objectives to reduce fixed cost. Cost control measures such as promoting digital communication tools and reducing travels, field operations footprint. Focus on improving productivity and optimizing working capital and carefully planning our capital expenditure plans. Collaborating on various projects to deliver health equipment like ventilators and medicines. With all these initiatives, we are committed to optimize our cost structure and improve our margins and profitability. Looking ahead, the actual impact on the business will depend on the severity and the course of COVID-19 in the near term, and we shall have a better clarity in the coming days once the lockdown is lifted. I believe we are better placed than other companies as we are asset light. We have the asset light model coupled with a strong balance sheet, which will not only allow us to navigate through these unprecedented times, but also emerge stronger. We are confident that once the economy activity revives, we will turn on our operational and financial performance as we remain the preferred partner of choice for offering time-definite services to our clients. Now I would like to hand over the call to Mr. Mukti to discuss the financial performance in detail.
Thank you, Chandra sir, and good evening to all of you. I will present the key highlights of our financial performance for this quarter. So, however, Q4 FY 2020 is not fully comparable with the Q4 2019 due to this unprecedented situation arising out of COVID-19, which impacted our performance as mentioned by Mr. Chandra in March 2020. And our revenue from this quarter is declined to 238 crore rupees from 266 crore rupees in the same period of last year, and it is a decline of 10.5% year-on-year basis. And absolute EBITDA has stood 28 crore rupees in this quarter in against of same quarter of last year is 35 crore rupees, and that decline is also around. So EBITDA margins declined to 11.7% in against of 13.1 in last year same quarter. And the profit after tax is also stood as 19 crore. It is also a decline of 12.5%. But margin level is the same, is 8%. And last year it was also around 8.1%. And capex in Q4 2020 we have done a capex of 9 crore rupees. And total outlay for the year was 32 crore rupees, and this was largely used for the construction of our sorting centers. Thank you very much, and now we are ready to address your questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the questions are sent. Anyone who wishes to ask a question, you may press star and one. First question is from the line of Nishan Shah from Develop Capital. Please go ahead.
Yes, thanks for an opportunity. So, just wanted to know what is the volume for the whole year?
Yeah. So volume for the whole year is around 8,40,000 ton for the whole year.
Okay.
And for this quarter, it is 2 lakh ton.
2 lakh tons.
Yeah.
Okay. And sir, will you be able to maintain the 50-50% mix between the SMSA and the other segments?
Yes, sir. Yeah, we will. Yes, we will. We are not changing that mix at all. There is no need. There is no requirement to change it.
That means, looking at the current situation, the focus will be more on the acquiring more customers on the SME side.
Absolutely. The large customers are not in a position to expand their businesses, and we are seeing that the opportunity is only arising from the SMEs. Interestingly, India is a country where we see that when there is an economic slowdown, it's the smaller guys, the SMEs, which give you more of the business. Contrary to what we are seeing in the news, that is, they are talking about the ultra small SMEs which are dealing in cash or who are dealing with the export material. So they are the ones who are in serious problem because they have manufactured, but they are unable to ship out their material.
Okay. But suppose if you add one new corporate, then what will be the next change and how will be the margins get impacted?
So obviously, large corporates are also added. It's not like they are totally shunned out. But you see, in past 2 years, the growth that has been happening in India, I would say last year before the shutdown, till February, the growth was coming from SMEs. The large customers were all not growing. They themselves were not growing, and they were not allowing their logistics players to grow. Whatever growth we had till February, the 5% or whatever, was because of the SMEs. I think going forward also, we will see that when we add the large customers, the same proportion is being added in that number of small customers, in that equal proportion, or even sometimes more, depending on the volume and the quantum of the large customer.
Okay, got it. And sir, are there any chances that you will be having a cut on the employee salary or the bonus as part of it?
So we are the only logistics company which has not cut down the salary. We have only cut down the salary of I think only one senior person, that is the MD. And I don't think that going forward also this would be happening. There's no need.
Okay, got it. So it will be, you will be maintaining salary.
Our salary cost is not very high. It's only I think in total would be about, with top management, about maybe 6 crores or something in a year. So it's not like we are an MNC or something where we are paying crazy amounts of salary.
And right now, sir, the fuel charges have come down drastically. So which is helping which might help the margins in expansion. But do that benefit will be passed on to the customers in the future, or it will be retained by the company?
No, it will be. Okay, there are two angles to it. Number one, the fuel cost has gone down, but the subsidy has increased. You must be aware of the subsidy. So we will have to see how that plays out when the economy opens up. Who will absorb what? At this point, we are not doing any touching of the price. We're not doing any price transfer to the customer or to the vendor or anyone else because it's too risky. Once it opens up, we'll have a fairly good understanding where the subsidy stands, where our rates stand. So we'll do that benchmarking and the analysis after the 17th.
Okay. And so just the last question.
Sorry to interrupt you, sir. I'll have to ask to come back in the question queue for a follow-up question. Thank you. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Yun Jain from Tokyo Marine Holdings. Please go ahead.
Hi, yes, thank you for this time to speak. I'd just like to ask, after the third quarter during that call, the outlook for the fourth quarter was quite positive. I think it was teen sales growth for the fourth quarter. Just want to know if you could give us month by month in the fourth quarter what the sales trend was like, just to get a sense of the impact before COVID and the impact, once COVID hit.
So I think January was something that we were all expecting to be really good, and it turned out to be only a growth of maybe, I think, 3% or something. And February was better than January. I think Mukti, it was how much, about 5% or 6%?
Yeah. So we almost in March, if you take a figure of that absolute term, we almost lost 40 crore rupees revenue in this quarter. And because as Mr. mentioned, Mr. Chandar, that was supposed to be a very good month for us, and we would have to be at 40 crore rupees more revenue for that.
Which means that we would be at a growth of about 12%.
5%.
Over in the month of March, over January and February.
Yeah.
I see. Okay. Okay, well, that's my main question. I'll get back in line. Thank you.
Thanks.
Yeah, thank you.
Thank you very much. Next question is from the line of Vishal Deria from Avia India Life Insurance. Please go ahead.
Hi, Chandra and Mukti.
Hi.
Hi. So my question is, this year, what is your outlook on pricing, outlook on utilization? Because in a year where volumes could take a massive hit, because MSMEs specifically are at risk. So in terms of what would be your outlook for pricing and utilization, and also your outlook on receivables, could there be a rise in receivables from the MSME side in this year?
So I don't think SMEs is going to see, we don't want to see any rise in receivables from their side, because they don't have any reason to hold back. I don't think we deal with that kind of a SME base. Pricing and capacity utilization is very early to say anything. Like I mentioned earlier, the real data, the real analysis can only be done once the engine starts running, which I'm hoping that it'll be in full gear by July. So I think it'll be very difficult to kind of say at this point how we will tackle both. All I know is that we are not we don't want to be in the position to be reducing the prices anywhere, but also we can be working on cutting out the pricing for our vendors, which is our cost aspect. That is something that we can consider doing also. So that's it's something which we get to know once things start moving.
So what is the utilization currently? I mean, after the lockdown eased up from end of April till today, what has been the pickup, and at what rate are you operating currently?
We are at about, I would say, at about 25% capacity utilization.
Okay. I'll come back in the queue. Thank you.
Yeah.
Thank you. Next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, what will be the extent of fixed cost in our business? How much of that fixed cost is possible to cut down in FY21, if you have any process?
Mukti?
Yeah. So we have a very good opportunity to, various costs are even semi-variable, like related to, traveling expenditure, because we now focusing more into the digital communication and all. So they're traveling, then conveyance, then some, customer meeting expenditure. Then we also taken one initiative. We are not putting any stationary expenditure this year, because We are providing a digital, contract note or docket note to our customer. And then, various retailers if we are, negotiating with them. So many expenditure we already planned up, and at least we have a plan to accept employee cost. Employee cost is also related to their meetings and other expenditure. Salary cost may be cut down by, on that 5 or 7%, but on other costs we are trying to cut at least 20% for the whole year, for the 2021. And there is various options for that I mentioned on that part.
You said 5 to 7% in employee, and the other expense you said 20%.
Yeah.
So if I have to put it that these two costs put together about 150 odd crores, so in that 150 odd crores annually.
It is 175 crore rupees annually.
Okay, 175.
Yeah.
So 20 means 15 or what 20 crores odd is what you are aiming to cut in FY20.
Yes. That salary will not be cut at all. These are related to expenditure to my employee related expenditure other, like meeting expenditure and all. That may be cut down, and some incentive may be also take a hit, like, that is also just variable kind of expenditure is there. So that is there only.
Okay. Yeah. Thank you very much, sir. Thank you. And hello.
Go ahead, sir, you're audible.
Yeah. Sir, any thoughts on the competitive landscape, how it will behave, and, what do you see the changes in the express logistics industry over the next couple of years?
Yeah, there will be a lot of consolidation happening. Already I'm getting fillers almost daily basis for acquisitions. So I think this is something which we knew is going to happen. And for any startup, for anyone which is like, heavy on that, which is asset heavy, is definitely going to take the toll.
Okay. Thank you, sir.
Thank you very much. Next question is from the line of Chintan Seth from Samisha Capital Private Limited. Please go ahead. Chintan, you are requested to unmute your line and go with the question. Due to no response, we move to the next participant. Next question is from the line of Sriram Rajaram from Ratnatraya Capital Partners. Please go ahead.
Thank you for the opportunity. I have a couple of questions. Now, if we see your book, SME forms 50% of your book, and do you see any possibility that SME customers could shift to the unorganized players in order to save costs? So that is my first question. Second is, if you could throw some light on your capex plans for the next 2-3 years.
I don't see any reason why the SME will shift to the unorganized segment, because unorganized segment is in tatters right now. So there is possibly there is no incentive for them to do that. Like unorganized segment is in a very bad state. So that is not going to happen. And number two, what was your question? Yes, we have already spent out of the 400 crores, we have already spent 120 crores. This year we will spend about 80 crores as we have planned. So there is no change in that.
Okay, and the next year it will be 100, right?
Yeah, about that much, yes.
And so why I asked you this question on SME is basically, people are on a cost cutting mode, and people may not see the value add that you provide. So there is a possibility that they could shift. So that is why I asked you this question.
Capex, from cost cutting point of view, they always have the option of going to the unorganized segment earlier also. If they wanted to, but it's just that they will not be able to provide the service and the assurity. Now is the time when we are seeing that companies are wanting our service more. They are not wanting point-to-point service as much. They don't want to, because manufacturing is also not 100%. It is now staggered, and it is going to go in parts and loads. That is what the express business is. The hub and spoke model is now going to come into full effect. It was already in full effect, but it is going to come, it's going to be enhanced further for our customers. because they will be shifting their point to point to express. So I don't think the unorganized segment will be able to provide this kind of service that we are looking at. The Pan India and all of that. So I do not see that as a threat at all.
Okay. Thank you. I'll join the queue.
Thank you. Next question is from the line of Sangeeta Purushottam from Cogito Advisors. Please go ahead.
Yeah, hi, good afternoon. My question is a follow-up to an earlier question on the fixed costs. You said that your fixed costs and some semi-fixed costs together are about 175 crores a year. So does that mean it's roughly about 15 crores a month, is it? So as long as you are doing more than 15 crores a month of revenue, you should be cash profit positive. Would that be a fair statement?
Sorry, I could not get your point. What our cost is?
What I'm making is, you mentioned earlier to one of the other participants that your fixed costs for the company for the whole year are 175 crores. Is that right?
Yeah.
Okay, so that translates to approximately, say, 15 crores a month.
Correct.
Right. Okay, so if you do 15 crores a month of revenue, you don't bleed. Would that be a correct statement?
No. So fixed cost is other than my operating cost. So my operating profit, if you see in last whole year, is around 30%. So after that we have to be charged that. So against 1,000 crore rupees, my operating cost is 700. Suppose. 300 crore rupees we have as a remainder for this fixed costs and profits. That is the understanding.
No, so 700, could you just explain this? So if you have 1,000 crores of revenue, you're saying what is the 700 crores? Your operating cost, is it totally variable?
Yeah, 100%. So actually what we are doing, we are all totally completely asset-light model company. We don't have any fixed cost related to my operating.
Okay. So 1,000 crores of revenue gives you an operating profit of 300 crores.
Correct.
And from that 300 crores, about 175 crores is fixed.
Yeah, correct. That is correct.
Okay. So, what is your break-even point for a quarter? Say, how much revenue would you need to do in a quarter to be, EBIT break-even?
It's 100 crore rupees.
100 crore rupees revenue for quarter?
For the quarter.
Yeah, for the quarter we are talking, yeah.
Okay, so if you did 100 crores of revenues for the quarter, your operating cost would be 70, right?
Or maybe slightly down even with that. We are targeting for is even reduce further because that belongs to last year. Now we are targeting to reduce further.
Okay, so I'm a little confused on this number, so I'm just going to go over with you. 100 crores of revenue you do, 70 crores is your operating profit, you make, is your cost, 30 crores is your operating profit, and your fixed costs per month are 15 crores. So you need to do maybe 150 to 200, roughly upwards of 150 crores in order to not to bleed, right? Not 100.
So whatever fixed costs right now we have, we are, negotiating for our all infrastructure costs with everyone. And we are confident to reduce it by that.
Right. But at the moment, with whatever costs that you have, would it be then fair to say you need to do at least 150 crores of revenue per quarter not to go into the red?
Let me explain. Our fixed cost per month is about close to almost 11 crores. We're taking the 3 crores extra because we had the travel and all of that, like the advertising and all of that was part of it, which is not going to happen this year. So essentially we would be needing our fixed is just the salary and the rental part, which comes out to be about 11 or 12. I don't know. I'll have to see the numbers.
Yeah, correct.
So that's about 30 crores for 3 months. And at 30 crores, what we will be needing per month is about almost 30 crores to break even, is what I'm looking at.
Right. So that means 100 crores of revenue per month.
Correct. Exactly. Not per month, this quarter.
Right. Okay. And what is, you're saying you will have a better sense by June or July as to what he... Hello?
I'm sorry to interrupt you. May I request you to come back in the question queue for a follow-up question?
Right.
Thank you. Next question is from the line of Ankush Agarwal from Stallion Asset. Please go ahead.
Hello. Thank you for taking my question, sir. Firstly, if you can just get some color on what kind of stress, if any, are you seeing on your receivables part? And secondly, if you can give the tonnage growth for the quarter and for the whole year.
Yeah. So receivables, we don't feel anything. Our receivable, if you see, you maybe have seen our balance sheet on the SEBI. We have the receivable number on the same number of the last year. So my, data receivables days are equally to that 48 days. That was also in last year and same in this year. So there is no challenge we are facing at all, and we are able to get the money even in April and May also. There is no challenge at all. And what your second question was on tonnage. So tonnage was in this quarter, that was, in a negative by 11.5%.
Okay.
And for the whole year, it is a negative of 1% only. And in complete, for the year is around 840,000 tons. And for this quarter was 2 lakh tons. That's the number. Yeah.
Okay. Thank you.
Thank you.
Thank you. Next question is from the line of Paresh Jain from the Raj Alliance. Please go ahead.
Yeah. Thank you for taking my question. In the initial part, you said that you're looking to reduce your fixed cost by 20 crores for the financial year 21, right?
Yeah.
Now, this 20 crores of reduction, this is likely to happen because of this reduction in advertising and travel expense, or is it that 11 crore expense will be reduced?
So if you see this quarter one, especially we are negotiating for whatever kind of indirect costs we have. Like, my rental for the godowns and my, electricity is there. Then again, what Mr. Chandran mentioned, traveling and conveyance and advertising, everything we are looking for. Whatever we can reduce, we will be able to reduce. So we targeting to, have only 30 or 32 crore rupees fixed cost for this quarter. That's our target.
Versus a normal of 45 crores, right?
No. So if you see, again, in a different quarter has a different fixed cost. Because we have to be, depending on various events in the company and all. So if you see last year, we in this quarter have the only 40 crore rupees fixed cost. That we will be reduced to that.
Got it. So I understand that advertising and travel and everything, this is probably variable because as the business activity picks up, you will spend more if the business activity comes down.
Absolutely.
You will reduce, right? So my whole point was this 20 crore of reduction. This would happen because of this reduction in business activity, which is advertising and travel, or is it related to a rental expense, which is slightly more perpetual, slightly longer term?
It is both.
It is both.
So, because see, as a company, we don't like to reduce rental of, if there's a branch rent less than 15,000 rupees, I don't like to reduce that. I don't like to burden that person, So we have to take into account, factor in everything, the human element also and all that. I mean, most companies are not even paying. I don't even need to pay the salary if need be. But we are not going to do that. I think where it is totally non-essential, we have chopped it already. We have already cut it out. And of course, we're not going to be giving any salary increase for at least Q1, Q2, possibly Q3, Q4. We may be giving. So it's our full efforts is to reduce as much of the fixed costs as we can. Rental is not much. Rental is only about maybe 3 or 4 crore rupees a month. And then above that, you have the miscellaneous expenses. You have like consultants. You have like some sort of like the normal indirect expenses that you have in running a business. So that is something that we're cutting down. Salary, I am not very keen. Maximum, I have cut out my salary for Q1, and I don't think we can go below that.
I think that's a fantastic thing that you have done, and that's really, I really appreciate that, because, that's the difference between good and great. I'll say it that way. That's fantastic what you have done. So congratulations to you on that.
Thank you.
For not retrenching and for ensuring that your employees are getting salaries. Okay. And secondly, in terms of since we get trucks from outside, right? So are we seeing a cost? Are we able to see some reduction out there?
So what is happening is this process I will initiate after the 17th. I don't want to be touching the beehive before, because it's very sensitive. There are driver issues, there are labor issues, there is the fear of the unknown.
Right.
And the more we shake the beehive, the more we might get stung. So I don't think now is a good time to really do any of that. Obviously, I have my sight on that, and how will we do it? We'll have to do it very, very tactfully. I know that there could be a possibility that we even reduce the number of vendors we have from the system. Instead of just reducing their prices, we might just get rid of them, because I know that this Q1 is not going to be very, very, very large in volume, and possibly Q2 also may not be that large in volume. We don't know. It's the unknown. So more than just reducing the rupee or two, we would just cut out the vendor completely.
Okay. Fine. Thank you, and all the best.
Thanks.
Thank you. Next question is from the line of Amish Tiwari from Eastbridge. Please go ahead.
Hi. Could you articulate how DFC could provide you either in terms of opportunities or in terms of any risk you see in your business?
DFC is got nothing to do with my express business, where I'm doing 40,000 delivery pickup and points in India. DFC is only, I don't know, it's been 20 years, it's not come up. I don't know when it's going to come up next. I don't put my rupee on that. I have not seen any other businessman put any rupee on that. They're definitely not a threat. In fact, last year from the Niti Aayog and from Mr. Gadkari, it was a clear mandate that it is being made to reduce the export time it takes, the cycle time it takes from North India to containers to reach Nhava Sheva, and all the export containers and the commodities is going to move on that. So that's and a recent chat also with Mr. Gadkari and all these eminent people, politicians. It was very clear that the focus is also now, because they're building a Delhi to Bombay highway, where it's guaranteed 10 hours. You can reach 10 or 12, whatever, 12 hours or 13 hours. In a truck, maybe 14. That, and where they'll have industrial corridors on both sides, that is a better, lucrative, more opportunity than the DFC, And this highway will be ready in 3 years. So I think investors should look at this highway, what it's going to hold for them and for the economy, versus the DFC, which hasn't come up in 20 years. And very clearly, this new highway says that the biggest problem of DFC was land acquisition, which is still there. But this highway is now going to is in the rural area in the hinterlands, and is going to be cutting through that, and it's going to be built for companies like us, who will possibly deliver Delhi, Bombay in like 8 hours or something. So DFC is not really is something that we are looking on or banking on or betting on.
Okay, great. Thank you.
Thank you very much. Next question is from the line of Vihan Subramanian from Samsung Asset Management. Please go ahead.
Yeah, hi sir. Thanks a lot for taking my question. So firstly, if you could just sort of explain to me in your business model, like say there is a volume degrowth.
Can you speak a little louder, please? I can't hear you.
Yeah, am I audible now?
Yes.
Yeah. So basically, my first question was like, when there is a degrowth in your volumes of like, say, 20% or 30%, like how should one look at margins? Because, so obviously most of your costs, like the employee costs and the rent expenses are going to remain the same. But like in your operating expenses, freight, which is like the major chunk of it, so you have tie-ups with like a lot of vendors and they might be like unorganized or small truck operators, etc. So how do you sort of like, do you renegotiate it with them based on like the revised volume that you've got? Or how do you sort of like, manage the margins when there is a volume decline?
So we don't, we pay the usage by the kilometer, right? So if we're not using their trucks, then we're not paying them. Simple as that.
No, but say you've contracted with, like, say you have a guy who is running a 10-ton truck and you're paying him per kilometer, and earlier you used to get 10 tons, but now you're getting only 7 tons. So do you still have to go with the same guy?
No.
Then do you have to look at a different
We go
truck?
with the same guy, but we won't go with 10 trucks. Now we'll only go with one truck.
Okay. So no, but it's not the number of trucks, so that's the tonnage I'm talking about, right? So you're paying on a per kilometer basis.
7
But
tons
then if your tonnage decreases, then how do you manage that?
Our thing is the same, what we give them, whether we use 700 tons from them or 7 tons or 700 kilos. So because they drive the vehicle as per my requirements, my company requirements, is how I'll be paying them. Like today, if there's a need of just 7 tons, as you said, one truck, we'll only pay them for one truck. Doesn't mean that the pricing will increase or something. It's a fixed, no? That's
Then your margin declined, right, sir? Because for instance, if you were getting 10 tons earlier, you were charging your client on a per ton basis, no?
No, this is not on the spot. This is vendor system. On the spot, the margins will decline. Okay? But this, and by the way, the on the spot market hire is now almost 100% of the current whatever freight rates are there. So market on the spot is totally different. And what you're talking will decline, no, not really. It does not vary for us in that manner. If I send 7 tons at 50 paisa per kilo, it's going to be 50 paisa. Or if I send 700 tons for 50 paisa. Obviously, the volume is now lesser, much lesser. So you're not going to get the gains of 700 tons. You'll get the gain of only the 7 tons that is being booked.
Right.
Yeah. So to add to Chandra sir's thing, so what we are ensuring the capacity utilization has to be intact actually in this condition. We are not going to truck empty like that. Like you were mentioned, just like out of this 10 ton, if we have the 7 ton material, then we will not leave the truck, like that. So we will be insured on that way, and the truck has to be utilized completely.
That right. So exactly, that's exactly what I was asking you actually, because if utilization decreases because of the decrease in volume,
we will not allow to decrease the utilization. What Mr. Chandra Agarwalji had advised. So we will be like earlier there was a 3 truck, now we will be only move 1 truck, but it has to be also completely full.
That truck can't move empty just because it's come down to 1 truck. They don't lose the capacity utilization effect. That will always be intact.
And assuming that suppose the lockdown and everything starts now, like in June, like after 1Q, you have like remaining 3 quarters for FY21. So could you kind of probably help us with like, just 2 things here, ballpark, what sort of, volume or turnover kind of growth and margins do you expecting, like ballpark numbers? And second thing is, could you just also say how much capex was incurred in FY20?
We're looking at about maybe like a business growth of at least 10 to 12%.
Okay.
The remaining year, we'll see how it plays out. And we have a very, and we would be having our profits equally. And what was your second question?
How much capex was incurred in FY20?
We spent about, I think, 35 crores. And the remaining, and we will be spending about 80 crores this year.
Okay. So on the first part of the question, I wanted to actually clear. I'm actually just taking a clarification of the first part. Sir? Okay, sure. No worries. Thank you so much, sir.
Thank you.
Next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just in terms of what is the number of fleet touch points that you have in terms of the vendors?
Number of what? Sorry?
I'm saying total truckers that we kind of have it in our vendor system. How many trucks do we have as touch points at this point in time?
I think 5,000.
5,000. So, and there is no minimum guarantee that you have a clause with your vendor?
Nothing. See, asset-light model is the beauty, right? You don't have any assets. You can play, it's like, you own a car, you drive it whenever you want.
Sure.
But of course, this is not like owning a car, thank God, but it's like we use it when we want.
Fair enough.
We're not losing money, interest, depreciation, nothing.
Okay. But you will evaluate this 500 truckers touch points. You said post 17th May, taking a call whether you want to reduce it or how do you want to go around that? Is that right?
It has to be done very carefully because, if we reduce it, and we don't get good quality back, then it's a And most likely, a lot of people, there's going to be a lot of churning in the industry.
Sure.
And we'll have to be very careful to emerge as, again, the top. And I don't think maintaining this being at the top is easier because, it's asset light and, our flexi business model in terms of flexi operations and everything, So I think it's kind of like easy to, like say, reduce price, remove them, but we'll have to wait and watch. We'll have to calculate it.
Sure. And sir, in terms of like the way you are looking at reducing your touch points for the vendors, I think everybody around also would be looking to do the same thing, and there could be a supply glut. So you think that could put pressure on the overall freight rates, assuming fuel prices remain stable? You think this phenomenon itself can put a lot of pressure on the freight rates and better negotiating power for you guys?
No, but freight rates are already very high now.
Okay.
On the spot, if you buy, any logistics company which is in the business of on-the-spot hiring and then providing service to the customer is going to be in trouble this year.
Okay.
Only because the freight rates are ridiculous, like 100% more, like say from all of Gujarat. Any trucker, they have increased their prices 100 times, and it's unbelievable. So that obviously means that the vendor system will come into place. Now we'll have to wait and watch and see how manufacturers are increasing their price or not. And based on that, we will take a decision whether we will increase the price or not for our customer. So it's a lot of, it has to be done very tactfully, I always say. It cannot be done like, it cannot be herd mentality. Usne badhaya, so we have to increase it. Usne ghataya, we have to decrease it. No, it can't be done that way.
Sure. Okay. And freight rates are now high because of the driver.
Sorry to interrupt you. May I request you to come back in the question queue?
Okay. Thank you so much.
Thank you. I request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Shash Mukhanwala from Canara Robeco Mutual Fund. Please go ahead.
Yeah, thanks. Thanks for the opportunity. 2 questions. One is on the pricing front. So I understand you said we won't be looking to reduce prices. But are we seeing any requests from our clients or SMEs wherein they are requesting to reduce the prices? And secondly, on the SME side, again, being a 50% contribution, just wanted to understand the mix on the client side. So is it that, so I understand it's quite, we have a very good base of the SMEs, but is it that that top 25-30% would be contributing a good amount and then there would be a long tail, or it's widely distributed SME category?
I think I'll answer your second point first. It's widely distributed, maybe 0.1%. In chota location, like maybe like, I don't know, Kanyakumari or something, they would not be of the same category as other SMEs. So it would depend a lot on the location, but in general, it is of the better SMEs that we operate with. Regarding your first question, reducing price is out of question. In fact, some locations we have already increased prices, and they have agreed also. So I don't think it's going to be any question of reduction in our case. If this was like plain vanilla transportation, then yeah, I would be like, okay, even you reduce 50 paisa or whatever makes a big difference. But here, it's a value-added service, so the chances are of reduction is like negative. It's not going to happen.
Sure. Thanks. That's it.
Thank you very much. Next question is from the line of Aman Dari from Morgan Stanley. Please go ahead.
Good afternoon, sir. Two questions from my side. One, based on the revised business plan that the company would have developed for this financial year, given the volatile situation, can you give some quantification on what is the volumetric growth you are targeting for quarter-on-quarter or year-on-year basis? First. Secondly, I just wanted to know more about the business, how the transportation happens. Do you use pallet system in order to transport or any other system you have?
Starting with question one, I'm expecting about maybe 8 to 10% volume growth this year. And number two, we do use hand pallets and motorized palletization in our sorting centers and in our branches. But unfortunately, in India, we don't have the system of palletization in the trucks, because packaging in India is very, very absurd and different. It's not like same type of packaging, for all types of manufactured items. So therefore, it cannot be placed on a pallet in a truck. And our truck quality is pathetic. It's like the Tatas and all that is ancient. It's 60, 70-year-old technology. And of course, the highways are great now, but as you come inside the city, there are a lot of potholes and everything. So I don't think so that is also a big problem. So palletization is kind of like really impossible inside the truck at this point. Yeah, for short distance, maybe, like if you're going from OEM to plant, maybe there they could be doing it.
Okay. So majority of the pallets that you use is basically...
Can you speak a little louder, please?
Majority of the pallets you use is restricted to the inventory if it is sold for a shorter period, if I stand correct?
It is used, exactly. Our material inventory, yes, for shorter period, yes.
Okay. So do you rent these pallets or how do you see the demand for these?
They are not expensive. Very high quality is available in India. We buy them.
Okay.
Because the usage is like daily basis, and they're pretty sturdy, so they go on for like 5-6 years without any problems.
Okay.
Thank you. Sir. Next question is from the line of Dinesh Pathak from Goldman Sachs. Please go ahead.
Thank you. Sir, have you shared the, what is the business activity or volume decline you're seeing in the month of May now that the country is into various, green, red, orange zones and some activities are...
I'm sorry, can you say again?
So have you shared, I might have missed it in the earlier part of the call, have you shared what volume decline you're seeing in the month of May, and now that, country is divided into various zones and some activities are allowed? What is the business decline that you're seeing, volume decline in the month of May?
So we are not, our business has started, we have started doing business, we have generated revenues already. And this is, I would say that volume decline is possibly around maybe almost, I would say about 70% or something. And this is something which is expected. We have to be careful in terms of, how we handle the products, how we get it, the manufactured goods. When our people go to their customer to pick up the material, whether it's sanitized or not, whether they spray it or not. So all those things take time. And I think 70%, and I would say that by this month end, if the lockdown opens, 70%, if manufacturing comes back to 30%, 40% by month end, then I would possibly see there could be a high possibility of almost 50% negative from, say, almost 95% in April.
Okay, understood. The second question is, these vendors you mentioned, 5,000 truck partners. So, and you also mentioned, on some routes prices have gone up 2x. So, and you said that there is no business with asset light, there is no guarantee of, any business that you underwriting with these partners. So then you are also seeing this sort of increase on select routes where prices are going up. Those prices are, you are also seeing and passing these prices on to your clients. Is that correct understanding?
Our pricing does not go up, no. If the spot hiring goes up in the country, our pricing does not go up because our vendor pricing is fixed. It was fixed last year. And it's still the same. So our pricing.
You also said that business is asset light and you've not underwritten any capacity with any truck partner, right?
Right. So if you are my vendor and you own 10 trucks, if I want to use only one truck of yours, I'm going to do that. I don't have to pay for the remaining.
At a fixed price, which is committed for a year.
It's not committed. We don't have any commitment of any sort. They are under an agreement that they will work for us. They will brand their trucks as per our company name. And if we are not going to give them any work, we are not liable to pay them. Our agreement doesn't say that anywhere. So that's why.
I understand. But what pricing are you supposed to give them? Spot pricing or a fixed price, which is determined
per kg. If we are paying them as a per kg, whatever they run, we have to be per kilometer. We don't need to be pay anything. If they stay empty, then we don't need to be pay anything.
Sorry, still not clear, sir. So one would be a fuel price. So you will pay a price which is a function of fuel price plus some price per kilometer basis, right? Is what you're saying?
Our price is determined in the beginning of the year or whenever, and it's in our prerogative when we want to change it and how we want to change it. So the pricing has not been changed. If I am paying them, my pricing works on, I will pay them by kilometer, how much they run. So if they have one vehicle running, say 10 kilometers, I'll pay them for 10 kilometers. And if they have 9 vehicles which are not running, I will not pay them. Simple as that.
If there is a scarcity of assets and as a truck operator, I am getting better prices elsewhere, why would I make my capacity available to you?
You can get better pricing elsewhere, but he will not get the material. So pricing can be there. Why do you think the truck on the spot have increased the pricing? Because there's no material. Here, what they are trying to do, which is like contrary to, the belief that, if the material is not there, pricing will drop. No, because there are not enough drivers. There are not enough labor out there. So they are bearing the brunt. They don't even have on the spot guys don't even have a second driver. So they are actually at a disadvantage. So even if the 9 trucks, if he doesn't work for me, where is he going to go? He's not going to get materials anywhere else. Maybe out of the manufacturing is all shut, but he knows that I will get the material. Ultimately, I'm the one who's going to feed his stomach. So he's not going to go anywhere. It depends a lot on not just the simple variables like the asset and that, but also, how the market is playing out.
Okay.
Who is able to provide the business, who is not able to provide the business.
Got it. Okay.
Thank you. Next question is from the line of Nilesh Damanskar from Investor Mutual Fund. Please go ahead.
Yeah, hi everyone. I have 2 questions. So one is, which of your client industries or sectors are showing some degree of revival based on whatever assessments you had recently, whatever opening up has happened?
I think now we are surprisingly, very happily, I'm glad to say that almost all our branches are open across the country, even in the red zone. And so manufacturing, so basically what it starts off with is delivery of the material. Like, in the beginning of April, we had 10,000 tons of material lying with us. So the quest is now to first deliver that material. And once you start delivering is when you will start doing the pickups. So slowly the pickups have started to happen. Now, they're varied industries. They're everywhere. They're not just, I will say that only in pharma or only, in like engineering. It's everywhere. Everybody is desperate to do business. In fact, people are so desperate that they want to take out their March last year, which, what Mufti was saying earlier, 40 to 50 crore worth of transportation that we did not do. That much material is pending to be taken out. So I think it started all over. I mean, there's no I'm not seeing one sector taking off more than the other or something.
you mentioned, right?
Hello?
Hello? Yeah. You said all the branches have already started.
Yeah, they have,
Okay.
yes.
Okay, great. And my second question was, how is the company going to ensure that driver availability, basically at the trucking vendor level, when things pick up? Because that's been an issue around. So how confident are you that you will be having truck drivers when things revive?
So already our truck, I get a daily report of the truck drivers reporting to, the trucks. And it's very encouraging. And even those truck drivers were not getting paid, so they're also anxious to get back to work. Our delivery system that we have, intracity delivery network that we have, they are also desperate to work because they want the money.
Right.
And ours is like, our ecosystem is as such that they know that we have the materials, we have the goods, they can transport. They're not going to be sending out empty trucks. So I think in general, it's it's about the roadblocks being moved out and us gaining speed and going ahead.
So essentially, truck driver availability should not be a big issue for you.
No, drivers, because we have our ecosystem already has the drivers available. It is the on the spot outside, which it does not have, which is facing the crunch.
Got it. And I have one last question, if I may. I'll just ask. So, see, in between we were hearing that there were a lot of state-related bottlenecks which had emerged because of extra checking and all. Have they kind of subsided, or do they still continue?
Yes, they're not there anymore like the way it used to be.
I mean to say the COVID-related checks, not the...
Yes, COVID-related.
Yeah. Okay, so they have kind of smoothened out, is it?
I just did Delhi to Gurgaon this morning, and there was no checking.
Okay.
There was a barricade, that's all.
Okay, great. Yeah, that's all from my side. Thanks and all the best.
Thank you. A request to all the participants, please restrict to one question per participant. If time permits, please come back in the question queue for a follow-up question. Next question is from the line of Krupashankar from Spark Capital. Please go ahead.
Good evening and thank you for the opportunity. I had one question pertaining to the support. Have you provided any support to vendors or truckers, given that there is this driver shortage and no cargo availability? So their financial position also will be under duress. So is there any extended support given?
Yes. Now I can tell you one thing, that the drivers which are stuck in our sorting centers, we are providing them with like a mattress and all that, and food is being provided to them also. And we're not charging the vendor. And the vendor has a lot of the it's from the cycle, it has its revenue coming in and its payments coming in. So that is also like with us in waiting for them to start the work so we can pay them. So they know that their money is also with us. So they're not going to they're very happy in parking the trucks at our premises and not worrying about it. So our laborers also, we're doing the same thing. Laborers which are in our premises, we have not really allowed them to go out. We convinced them to stay because as we have a strict sanitization process. Because if they leave, then they would be ultimately lost in our productivity. So that we are very well managed and very well taken care of.
Chandra, what I meant was anything on the financial side of things which are paid out earlier itself as an advance, or perhaps a payout to meet their obligations, etc. Financial obligations, etc.
To meet their financial obligations when?
Over the last 2 months.
So we don't have to pay them, right? If they're not working, we don't have to pay them. Okay, there's a labor sitting in my sorting center and I'm giving him the privilege to stay there. Why? I will not pay him salary. I will not pay him he's on my liability. If he dies or something also, it's on my liability.
No, got it. Just as a vendor retainment sort of a measure is what is the angle that I was coming in from.
Vendor cannot go anywhere. Vendor will go where and get what? He's not going to get any business, no money, nothing. If he leaves my company and goes somewhere, he's not going to get any business.
Got it. Thanks.
If vendor goes, leaves the company, he becomes a on-the-spot hirer. His company becomes like, he puts some trucks on the hire. So on-the-spot hiring. So on-the-spot hiring business is dead now. There's no one hiring. So he's totally at loss.
So Kripasagar, on to fulfill their commitment as a finance commitment, so we are releasing their money, whatever, because we have the 1 month credit with us. So supposing there is no business in the April, after mid of March, so whatever dues we have releasing that. So they can pay their EMIs and all kind of things. That we have supported that. Another thing, because government has also supported them, they can be defer their EMIs and insurance and everything. So there is no challenge we as such face in a whole these 2 months. Nothing new happened on that part.
Thank you.
Yeah.
Next question is from the line of Pratik Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, thanks for the opportunity. So one question is on gross margin. So you mentioned about the fixed cost cutting off around 20 crores in FY21. So in FY20 you improve your gross margins by around 50 bits. To around 29% on a year basis, while your exit was around 30%. How are you seeing gross margins for the FY21?
Yeah. So Pratik, we are looking forward to again improve my margin level by at least 100 basis points in this year as well.
So this will be over and above that fixed cost cut of around 20 crores which we are looking at.
Yes, correct.
And just some question on business partners. You said we have like 5,000 business partners or touch points to work with. So how these would be like a 10-15 year age old partners with us, or like these are like keep changing? How would that mix the age wise?
So if you see, there is all are basically old relationship person with us. So I think almost everybody is more than 8 year or 10 year with us. And as for business increases, new vendor is also increasing time to time. So average age you maybe take as a 7 years, because again whenever we don't want to be monopolize any vendor or any route. That's why we are also encouraging to adding the new vendors and suppliers. That is our strategy.
And get back to you.
Yeah, thank you.
Thank you. Next question is from the line of Young Jain from Tokyo Marine. Please go ahead.
Yeah, hi, thanks. I just want to come back to what you mentioned about the 40 crore loss in March, and as a result, if we add that back, the fourth quarter I think was up 4.5% in terms of the top line growth. So I just want to come back to that. I mean, coming out of the third quarter, the guidance was maybe in the teens. Just wanted to get a sense, what was shortfall, or what was what would happen unexpectedly in the fourth quarter?
Right. So what happened was first of all, Diwali was a really big problem in India. It did not take off the way it was expected. So Q3, we started Q1 with double-digit growth. Q2 we came up to double-digit growth, and our PBT hit 60%, more than last year. And then Q3 is when we were expecting higher growth even, but that did not happen because of a very low Diwali and a very poor December month as well. Then we expected January to pick up for the entire year to kind of equalize in the last quarter, which is always the best for the whole year. January was also pitiful, very, very pitiful because of the, I think it was possibly the slower economy situation in India. February, we saw a little bit pickup happened. And finally, in March, when we were about to break it at about double-digit growth, is when the last 15 days is when the lockdown effects started to come into play. And unfortunately, that really made us, that's the only saving grace was that 1% growth that we had for last year. I think your second part was 40 crore loss we're not expecting in Q1 of this year.
No, 40 crore in March, sorry, 40 crore in March, yeah. I just want to follow on the outlook, right? You mentioned just now 10 to 12% sales growth for this financial year, FY21, and 8 to 10% volume growth for FY21. I just want to make sure I had that right. Okay, thank you. That's all. Thanks. Bye. Thanks.
Thank you. Next question is from the line of Mukesh Manik from Valent Capital Advisors. Please go ahead.
Good evening, Mr. Agarwal and Mr. Lal. So my question was regarding the top line. It's been pointed out even before that, some rule is for our sales growth, we look at 1.5 times to 2 times GDP growth. And even if I, account for the 40 crore loss of business, we would have still managed to reach 5% sales growth year on year. I just wanted to understand that what are the sectors that may have caused a slowdown, which you were expecting to revive back in H2, maybe a customer segment, either SME or corporate, or a sector-wise, maybe auto, pharma, or any other sector that...
So let me tell you that 5% growth actually came only from SME.
Okay.
It did not come from the big guys at all. And this was something which, I knew, which was coming out to be as we saw the economy was floundering, the